Hello everyone and welcome back to Outspoken Market Global. Leandro Guerra speaking. In a previous class, I explained how to trade long straddles using the gamma exposure, the GEX. Now, today I'm gonna flip the whole idea, and instead of trading the options directly with the long straddles, and we even discussed the possibility of trading short straddles as well, I want your attention to the opportunity of also trading directly the spot. Now, I remember I told you in that class that one of the key aspects of trading the options with the straddles, especially the long one, is that we don't care about the direction. Here, since we will be entering a long or a short position, eventually, of course, the direction matters. And please also keep in mind that trading the spot directly with a long or with a short position can be naturally replaced by buying a call option or buying a put option with all the implications that we have. Now, just to keep it simple, I will just speak about longing the spot and shorting the spot as the main reference for this class. You can notice that every single day when I publish for you guys for free all the GEX dashboard for Bitcoin. Now today I started also for the IBIT listed on Nasdaq, and as usual the S&P 500 that you can use to trade the SPY, the SPX, the mini SPX, that is the XSP, whatever related to the S&P 500. You just need to adapt to the proportions, of course, but it's the same instrument with some small variations. So you can notice that we have a few key levels of gamma exposure. The call and the put walls that we saw in the previous class, the gamma flip, and eventually the pin candidates. Now, I usually represent, and this is option, I mean, it's my preference, you can choose in the way that you prefer, the pins as these dotted lines, and then as well as the flips, and the solid lines are the walls. What matters here is the following: either for the S&P or for the IBIT, and you will see that today was a perfect day. We got everything like a textbook, even for the Bitcoin in this case. But the key point is the following. Now, what those levels mean when we are speaking about trading the spot. Yet the call and the put walls, they are going to be working as major support or resistance levels. Remember always that the gamma exposure represents the level on which institutional traders, market makers, all of those big guys, they will use these instruments to hedge their directional exposure. The key element when thinking about the spot is, where am I in terms of gamma exposure? In the sense, are we in a positive GEX or in a negative GEX? This is the key. And why is that? When we are above the gamma flip, it means that we have switched regimes and we are entering the positive gamma exposure. When we are in such zone, what we have is, as the price of the spot moves up, the institutional players will have to sell the spot in order to hedge their positions that they have built in the options, because it's like the dog wagging the tail. In this case, it's the tail that are the derivatives wagging the dog. But nevertheless, because the market's way bigger. But anyway, that is the key point. So as the price moves up in a positive gamma exposure regime, meaning we are with the price above the flip, it doesn't matter if the trend is up or if the trend of the price is down. On the positive level, we sell the tops and buy the dips. That is the thumb rule. If we are in the negative zone of the gamma exposure, meaning we are below the gamma flip, then it means that we are accelerating any type of movement that we might have, whether if that movement is down or up. And the gamma flip, it's of course the key. Now, observe what we have today in the S&P. We had the opening of the day here. That was from yesterday, and yesterday we were yet in a negative zone for the GEX. And today we kept that position because you see that the gamma flip for 0 days to expiration and for the 1 day to expiration, they were essentially most of the time today above the spot. So the movement we got up, that was the recovery of the day from yesterday. And even today, when we got the opening in this red bar over here, that we got that major move, and then you see that we have a rapidly acceleration towards a direction. And that direction in this case was the gamma flip. So you see the movements, they are way larger. Now, that guy, it's a main support level if the price is coming from up to down, or if the price is moving from a down level, a lower level, up to an upper level, then it becomes a resistance. And you see precisely that we went up, we got stuck over here. So the market was fighting that exchange, that flip of the gamma. It was rejected. And then you can see that we have the acceleration of the movement. Perfect. And this is a place on which we can buy a put or eventually short the underlying asset. And this is what I did. I published in my channels, so you saw on a result that I did with the S&P. And as we not confirmed the breakout of the gamma flip, we flirted with that, and you see the movement accelerating. So you see those green candles, they were pretty small. Let me zoom in. They were pretty small in comparison to the ones in the negative zone of the gamma, that are the ones below the gamma flip. If we look at the IBIT, it's rather the opposite. So yes, Bitcoin itself and anything related to that, they have larger candles anyway, because they are extremely volatile instruments, but of course they will get even more volatile if we are in a negative gamma. But here we are in a positive gamma, meaning that whenever we reach one of the levels, we tend to mean reversion, not to trend following. And naturally, this is what has happened. So, and here we got a major level at 40. That was the call, and the call actually for 1 day to expiration, 2 days to expiration. We got the market opening just above the walls, and we have the spot price above both flips for 1 and 2 DTEs, and then instantly we reverted back, because here the market makers, they said, look, we must erase our directional exposure, sell the spot. True. Rumors that President Trump may end the war, whatever happening in the market outside, price went up again. And then clearly another rejection in the levels. By the way, 450 was the level from yesterday, so quite interesting that today was here, and the other pin was 41, but it didn't get there. But you see the market rejection over here, then we went down again. So rejecting because we are naturally selling the tops and eventually buying the dips. So as long we are in the positive gamma exposure, in this case, the movements, they might be up. I mean, we might have an uptrend, but it's still the volatility here will shrink. We will have these zigzags. It favors mean reversion movements. If we enter like we were in the S&P, a negative gamma exposure, these movements, they are more trend following. And we can see that despite the bounces that we have had since the beginning, actually the end of February, we have, down gaps each opening and then recover along the day. And but you see the major trend, it's down, acceleration of the movements eventually throughout or during the day. But you see, while I'm speaking, we have this new open candle over here, and let's see what the market will give to us. Now the flips, since they are a major decision point, you will observe that in several cases the price eventually will keep floating around that, gravitating around it, because here's where the fight is happening. So it's not unusual that we keep this indecision state around the flip until we have a major confirmation breaking up or breaking it down and then changing the gamma regime in this case. Is that clear? If it's not, let me know in the comments. I'm happy to take any of your questions. Also, enter in the Discord channel. It's free there. You can find me whenever you want, just to ask also whatever you want. But please pay attention to that. I mean, if you want to be serious, if you don't want to be serious, then you just ignore everything that you learned today. I'm going to drown the fantasy lines from traditional chart analysis in any chart, whatever. But this is quantitative trading at its finest if you're not necessarily developing a machine learning model, as I usually do, but this is something you can do on your own. Oh, Leandro, where do you find that data to drown these levels? Well, good brokers or even the exchanges, they offer the information. So in here you have the options chain, and the option chain will have all the Greek information, the opening interest, everything that you need to know in order to get those guys calculated. And the calculations I also taught you in one of my previous classes. So, okay, so take care. See you next time. Bye bye.